Sometimes a crisis that's happening thousands of kilometers away can feel, well, distant. But what's going on in the Middle East right now is about to have a very real, very direct impact on your monthly budget right here in Singapore. We're calling it the Hormuz Ripple, and today we're going to break down exactly what it means for your wallet and what you can do about it.
So let me ask you this. Have you had that feeling recently? You look at your electricity bill or you see the final price of your Grab ride and you think, hang on, wasn't this cheaper last month? Well, I can tell you, you're not imagining things. You're seeing the very first ripples of a huge global disruption.
And look at how fast this is happening. In just 2 months, a typical electricity bill for a 4-room flat jumped by almost $12, and that fuel surcharge on your ride, it shot up by nearly 80%. This isn't some abstract economic theory. This is real money coming out of our pockets right now.
Okay, so what is causing all this financial pain? Well, the source of the problem is a tiny but incredibly important strip of water on the other side of Asia, a place that's suddenly become a massive geopolitical flashpoint, the Strait of Hormuz.
The experts call it a maritime choke point, which is a pretty good description. Think of it like a major highway that suddenly narrows down to a single lane. It's a vital artery for global trade, and if it gets squeezed or blocked, well, you get a massive traffic jam. And the Strait of Hormuz? It's probably the most critical energy choke point on the entire planet.
Just how critical is it? Well, look at this number, 20%. 1/5 of the entire world's daily oil supply has to pass through this one narrow strait, not to mention huge amounts of liquefied natural gas, or LNG. So you can see, any problem here doesn't just create ripples, it creates a tidal wave in the global energy market.
And that's exactly what we saw happen. The conflict started in late February. Just a couple of weeks later, the strait was basically closed for business. And the financial markets, they reacted instantly. By the middle of March, the global price for oil had shot past $120 a barrel, a huge spike.
Okay, so that's the global picture. But how on earth does a crisis in the Persian Gulf make your utility bill in Tampanis go up, or make a ride from Jurong more expensive? Well, the connection is actually frighteningly direct.
This chart, this right here, is the key to the whole thing. It shows our biggest vulnerability. A staggering 95% of Singapore's electricity is generated by burning natural gas. And since we have to import all of it, we are completely exposed to what happens in the global market. When the price of fuel goes up out there, our cost to keep the lights on goes up right here.
And hey, don't just take it from me. The government has been very clear about this. The minister, Dr. Tan Seelang, basically spelled it out for us back in March. Higher prices are not a possibility, they're a certainty. The only question is how high they'll go. So here's the nuts and bolts of it, straight from the Energy Market Authority. The price of the natural gas we buy is actually tied to global oil prices in the contracts. It's a simple, direct link. When you see the price of oil soaring on the news, what you're really seeing is a preview of your next electricity bill.
And the market is already reacting. If you're on the open electricity market and need to renew your plan, you've probably seen some pretty shocking offers. Prices for new contracts have jumped by more than 10% in less than a month. The retailers are just passing on the higher costs directly to us.
Now here's the part that's a little tough to hear. The official word from the EMA is that this is probably just the start. The price hikes we're seeing right now don't even reflect the full increase in fuel costs yet. So we really need to brace ourselves for even bigger jumps in the next few quarters. Okay, so the outlook is definitely challenging. But while we can't do anything about global oil prices, we absolutely can be smarter about our own household finances. So let's switch gears and get practical. Welcome to your Hormuz Survival Guide, with 3 things you can do this month to fight back.
We're going to focus on 3 key areas. First, getting every dollar of help you're entitled to. Second, cutting down your energy use at home. And third, making a really strategic choice about your electricity plan.
All right, tip number 1, maximize government support. Think of this as your first line of defense. There's direct cash payouts, you save rebates that cut your utility bills directly, and more CDC vouchers on the way. These are all designed to cushion the blow, so make sure you're taking full advantage of them.
Number 2, get smart about how you use energy at home. You've got those climate vouchers, right? Now's the perfect time to use them on a more efficient appliance, which will lower your bills every single month. And honestly, even small changes, like bumping up your aircon to 25 degrees, really do add up over time.
And finally, tip number 3. This one's a bit more strategic. Because of a lag in how prices are set, the regulated tariff from SP Group is, for a short time, actually cheaper than the new plans on the open market.
So, if your contract is up for renewal right now, switching to SP might save you money for this quarter. But, and this is a big but, you have to know that the regulated price is almost guaranteed to shoot up in the next review to catch up with the market. It's a short-term win, but be ready for that future price hike.
You know, this whole situation is just a powerful reminder of how connected we are to these fragile global supply chains. We can be smart, we can be strategic, and we can protect our budgets. But it leaves you with a bigger question, doesn't it? As the world gets more and more unpredictable, how much control can we ever really have over our own cost of living when the biggest threats are happening thousands of kilometers away?